Hey everyone, and welcome back to the channel. Today, we're diving deep into a company that's revolutionizing how surgeries are performed, Intuitive Surgical, ticker symbol ISRG. You might not know them by name, but you definitely know their star product, the Da Vinci robotic surgical system. Visual, B-roll footage of a Da Vinci robot in action, surgeons at a console. On-screen text. Intuitive Surgical, ISRG, robotic surgery pioneer. Intuitive Surgical isn't just a medical device company. They've essentially created and now dominate the field of robotic-assisted surgery. Think of them as the gold standard for complex, minimally invasive procedures. So how do they make their money? What's their financial picture? And what does the future hold? Let's break it down. Visual, section title card. The business model, more than just robots. Their business model is often compared to the razor and blade strategy, but it's even smarter than that. The razor is their multi-million-dollar Da Vinci surgical system, a massive piece of equipment that hospitals buy or, increasingly, lease. These systems can cost anywhere from $1.5 million to $2.5 million each. Visual, close-up of a Da Vinci system. On-screen text. The razor, Da Vinci system, $1.5 million to $2.5 million. But here's where the real magic happens. The blades. These are the proprietary instruments and accessories that surgeons need for every single procedure. They're designed for limited use, ensuring precision and safety, and hospitals have to keep buying them. This creates a highly predictable, recurring revenue stream that scales directly with the number of surgeries performed. In fact, in 2025, this blades segment alone generated over $6 billion in revenue. Visual, animated graphics showing instruments being loaded into the robot. On-screen text. The blades, instruments and accessories, recurring revenue. Beyond that, they offer services, including maintenance contracts and software updates, ensuring those 11,000 plus systems globally keep running smoothly. They've even introduced leasing and usage-based models to make it easier for smaller hospitals and surgery centers to adopt their technology, expanding their reach even further. It's a complete ecosystem that makes it incredibly hard for hospitals to switch to a competitor once they're invested. Visual, diagram showing systems, instruments and accessories, and services flowing into a central ISRG box. On-screen text. Switching costs equals customer loyalty. Visual, section title card. Financial health, a story of resilient growth. Looking at their financials over the past 5 years, Intuitive Surgical shows a narrative of consistent, strong growth. In 2025, they hit a huge milestone, exceeding $10 billion in annual revenue for the first time. Visual, simple bar chart showing total revenue from 2021 to 2025, highlighting the $10.06 billion in 2025. On-screen text. 2025 revenue, over $10 billion. While 2022 saw a dip in net income due to big investments in research and development, supply chain costs, and COVID impacts in China, the company quickly rebounded. Their revenue jumped over 20% in 2025, largely driven by more procedures being performed and the successful launch of their latest system, the Da Vinci 5. Visual, simple bar chart showing net income, specifically highlighting the 2022 dip and subsequent rebound. On-screen text. 2022 net income dip, R&D and supply chain. Visual, section title card. Capital allocation, growth over dividends. Now, for those of you looking for dividends, here's a crucial point. Intuitive Surgical has never paid a cash dividend. This isn't an oversight. It's a deliberate strategy. Management believes the best way to create value for shareholders is by reinvesting earnings back into the business for innovation and growth. Visual icon of money being reinvested into R&D and a factory. On-screen text. No dividends. Why? They pour billions into research and development to stay ahead, like with the new Da Vinci 5. They also conduct share repurchases, buying back their own stock, which reduces the number of shares outstanding and can boost earnings per share for existing shareholders. And here's the kicker. They have a fortress balance sheet with over $9 billion in cash and virtually no long-term debt. This gives them incredible flexibility to invest, acquire, or weather any economic storm. Visual graphic illustrating R&D, share repurchases, and a large cash pile with a $sign as their capital allocation. On-screen text. Cash on hand, $9.03 billion. Long-term debt, $0. Visual section title card. Market dominance and moat, hard to beat. In the world of soft tissue robotic surgery, Intuitive Surgical is the undisputed leader. They hold an estimated 83.5% market share. Their competitive advantage, or moat, is incredibly strong. Visual world map highlighting regions with Da Vinci systems. On-screen text. 83.5% market share in robotic surgery. With over 11,000 Da Vinci systems installed globally, they have a massive ecosystem. Surgeons worldwide are trained on their systems, and there are tens of thousands of peer-reviewed articles validating their technology. For a hospital, switching to a competitor would mean retraining staff, rewriting protocols, and buying new expensive hardware, making the switching costs practically insurmountable. While competitors like Medtronic's Hugo are making inroads, Intuitive's deep entrenchment gives them a significant edge. Visual icons representing installed base, surgeon training, and clinical data. On-screen text. 11,106 systems installed. 43,000 plus clinical articles. Visual section title card. Future growth, new frontiers. So what's next for this robotic giant? Plenty! The most immediate driver is the Da Vinci 5 replacement cycle. This new system is a game changer, with 10,000 times the computing power of previous models and revolutionary force feedback that lets surgeons feel the tissue. Hospitals are eager to upgrade, driving new sales. Visual dynamic image of Da Vinci 5. On-screen text. Da Vinci 5, 10,000x more powerful. They're also expanding into new procedures, like certain cardiac surgeries, which opens up a huge new market. Their Ion platform, for minimally invasive lung biopsies, is growing incredibly fast, helping detect lung cancer earlier. And they're strategically targeting ambulatory surgery centers, ASCs, with more affordable systems and subscription models, bringing robotic surgery to a wider range of outpatient facilities. Visual split screen images of heart surgery, Ion system, and an ASC operating room. On-screen text. New markets, cardiac, lung biopsies, outpatient centers. Visual section title card. Key risks. What could go wrong? No investment is without risk, and ISRG is no exception. Geopolitical tensions and tariffs could impact their profit margins, especially with rising competition from local players in China. Their sales are also tied to hospital budgets, which can be sensitive to economic downturns. Regulatory and reimbursement changes can affect adoption rates. Visual icons for a globe with trade barriers, a falling economy graph, and a magnifying glass for regulations. On-screen text. Geopolitical risks, economic headwinds, regulatory changes. Finally, their valuation is quite high, trading at a forward price-to-earnings ratio of 47 to 54 times. This means the market expects significant future growth, and any slowdown could lead to stock price volatility. Visual graph showing a high PE ratio compared to industry average. On-screen text. High valuation P/E 47-54x. Visual section title card. The takeaway: long-term vision. So what's the bottom line? Intuitive Surgical is a high-quality company with an extraordinary competitive position, deeply embedded in global healthcare. They're transitioning from pioneers to global platform leaders, with recurring revenue making up 84% of their sales. For long-term investors, ISRG represents a powerful growth asset. You're investing in a company that's defining the future of surgical care, backed by continuous innovation and a rock-solid balance sheet. However, that premium valuation means you need a long-term horizon to truly benefit from their technological expansion and growth. Keep an eye on their digital and AI initiatives, as that's where they're heading next. Visual Intuitive Surgical logo. On-screen text. ISRG, a long-term growth asset? Requires multi-year horizon. If you found this breakdown helpful, hit that like button, subscribe for more financial insights, and let us know in the comments if you own ISRG stock or what you think of robotic surgery. Thanks for watching.